General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
Alright, let's knock this out. I pretty much did it. Let me do this. This is for the weekly review or the weekly forecast. Bullish sentiment is actually going down. And bearish sentiment caught up to bullish sentiment. And they're about even. So we're going into a 50-50 week. Hold up. Been typing too fast. VIX COT. Just eyeballing them. Commercials have all the control of the open interest. They own most of the long open interest. Bullish VIX usually means bearish equities. Okay, let's see this. Hold on. Because I can just put this in here. Let me see if I can copy this picture first, though. Here we go. Can I copy? Copy link to block move. Crop image, capture image, replace. Oh, maybe I can screenshot it. VIX futures. Copy. See if that works. VIX COT. Yeah, net positions. It's printing out a long thing. Okay, down. All right, so what seasonal tendencies? The VIX tends to rise in August and October due to regional seasonal risk aversion. Okay, so this is it. Matter of fact, let me just put this in here and I can do it like that. Just running with the multiple screens. Then I'll also put the link here for this GTP just in case people want to use it. Bam. Detailed breakdown, 7 questions. What are the total net positions in the picture after all traders? Commercials, net short. Asset managers, net long. Leverage funds, net short. Other reportables, net long. Who in the picture is net bullish and bearish? Net bullish, asset managers. Net bearish, commercials. Commercials are net bearish. This implies that smart money's commercials and fund is net bearish on VIX, while more passive investors are bullish. Calculate latest positions, including only active traders. Focusing on commercials, asset managers, leverage funds. A minute non-reportable is another. Active traders are significantly net short VIX. What kind of price behavior should I expect from this position? This setup generally indicates risk on sentiment. Commercial short and volatility implies expectations of lower VIX, asset managers loans, hedging for downside, leverage fund short. Commercial net position showing the usual strength. Yes, commercials are usually strong next short, suggesting a potential big move down in VIX. So they saying they're net short though. So I'm looking at here like, oh, commercials are net long, but it's reading it saying it's net short. See how non-commercials got the short. Asset managers are net long. Okay, that makes sense. I think I left over short positions. Okay, I'm starting to get it. And this is just the changes from open interest. Okay, so boom, boom, boom. That's just for the VIX. Only red photo news is Thursday. So what is that? That's technically not a textbook week. Powell speaks Tuesday. I don't know what that is though. I don't know if Forex Factory giving us information on that. Let me go look up the Fed calendar. Tuesday is what? To 22nd. Jerome Powell reviewed capital framework for large banks at conference. It's a speech. And Bowman talks at 1. Oh, you didn't even make it to the calendar, Bowman. Powell talks at the integrated review of capital large framework. Let me screenshot this. And it's an orange folder. Tuesday. Integrated review. So he's just talking that about banks. So that's not gonna move the market. I don't think this is gonna move the market. We got unemployment and PMI. I'm thinking unemployment is going to be good. The data has been strong lately. PMI is interesting, and I think it will have the most attention. But I expect it to be good, and I expect Trump to threaten Powell to fire Powell if he don't cut rates in July. All right. And speaking of rates, 95% chance we not cutting rates in July. 95% chance we not cutting rates in July. I don't know what to make. I know now more Fed people are starting to say, "Oh, I'll cut rates for Trump," but they could just be playing like, "All right, I'll cut the rates, Trump. Put me in Powell's job because Powell he come up for reappointment here soon, like next year or the year after that. I think it's 26. We need. I don't know what to change this. I don't know. I have no idea. I don't even know what he's looking for it to change. Because he said we're looking at unemployment. Unemployment's been cool. I think it's political. Top 10 this week. Uh, just Google and Tesla Wednesday, which kind of sets us up for we could have a one-sided bullish week. Due to Tesla and Google this Wednesday after market close. What is stopping them from having good earnings? That's the question. I don't think nothing's going to stop them, but that is the question. So some pop up through the week. Oh, this could stop them. It could be a shakeout move. They'll play you. They'll say, "Oh, Google been messing up. They're not gonna have good earnings." You get out your position and they go to the moon. Dollar's chopping right now. I would like to see AMD from here with the manipulation, taking the high out. Hot. All right, this is for NASDAQ consolidated. Let me screenshot this. I think I should put this on here again too, because people be wanting a link, and now I put the link out. Then don't know, like different people see different stuff in different places and then they don't find it. Let's see here. And then I'm gonna put this here so you can see it too. Let's go this way. Bam. 7:15. When was that? Last Tuesday. Non-commercials. Net position. They're net bullish. Commercials are net short. Non-reportables are net bullish. Market is balanced overall. Very slight short net bias. Okay. Net bullish, non-commercial, small traders, net bearish commercials. Commercials are betting against the rally, which is smart. Latest position include only active traders. Active trader position is mildly net short, mainly driven by commercial hedgers. What kind of price behavior should I expect? Commercials are significant short. Large spectral longer than increasing positions. Open interest fell slightly, meaning profit taking is near. That is interesting. Yeah. So I'm seeing short-term reversal, consolidation at the top. Okay, as far as the market right now, we're in expansion, so all we can expect is a retracement, not a reversal. We need to go into consolidation before we reverse. Short usual strength, weakness, stretch. Commercials are holding, boom, boom, boom. Currently at 68. This is sharp pullback. Okay. It's going to be interesting. Large speculators versus small traders. Yeah, nobody has a chance against commercials in NASDAQ. You pair with commercials. NASDAQ tends to weaken in late July, August, and then strengthen again September, October. Sell NASDAQ or buy puts into early August. Okay. No. See, that's why I put a whole disclaimer, because it's like it's telling you all this other stuff. You be like, oh no, I got the whole disclaimer. You be SOL. Nope, I'm not a financial advisor or a fiduciary. I am a student. This is the dollar. Let me put this in. It's the last COT report. This is the Dixie COT report. And I think I will, just for the sake of uniformness, put the link so that way other people who want to study can see that link and be like, oh, okay, you can get this from here. Okay, let's see what's going on with the dollar. Non-commercials run the dollar. Hey, you can just look at it. Look at this. Non-commercials, open interest. Commercials got some long open interest. Probably just hedging, but they have to hedge. It's their job. Net positions, non-commercials or net short. Commercials, net long. Okay, it's balanced. Who in this picture is net bullish? I know commercials are bullish. Active traders, net long, led by commercials. Commercials increase loans, non-commercials flat, just open interest up slightly. This is a mild accumulation phase of commercials. Steady buying into weakness. Likely reversal or breakout after prolonged dollar weakness. Expect upside pressure in coming weeks. Our commercial net position showing the usual strength or weakness. Commercials hold 30% of open interest loan. Only 24. Commercials loan bias steady accumulation. Near top. Desal of historical strength. We're signaling a big bullish reversal. So I need to keep this in mind. Gotta be flexible. Gotta be able to play both sides because I got a sell button for a reason. Large specs bears, short heavy, small spec next shorts, contrarian loans. When commercials are buying with specs are selling, watch for reversals. They know the value. That's actually smart. Since the bottom of mid-July. Okay, so it's saying, well, it's mid-July right now. Seasonality saying, all right, we can turn around. We already started retracing. I still want more shorts though. Would I buy here? What would I feel comfortable buying? Closing above this and using 50% of this as support. So closing above this, coming back down, then going back up. Then I'll be all right. Let's swing some sales on the EU or something. For the month, macro we bullish. Macro monthly order flow is bullish. Week 1. Looking for higher prices. Look for higher prices. No sign of reversal yet. So focus on buying retracements this week. Or looking for sell to buys daily. Friday's a small range day. You could use both sides of Friday or to engineer liquidity for the week. Friday, Tuesday. Friday high and low. This is actually previous week's high. I'm going to keep that red. Then Friday's low. We'll use that. It's liquidity. Above here, sell to here. Boom, boom, boom. We can play Friday's low like ping pong. Side of Friday. So you want to put it for weeks. This is a bullish week. Since it's a bullish structure. Wait for Friday's low. And buy under H4. H4 looks strong. Kind of holding that old high too. Kind of like a breaker. Let's watch. Don't like what price is at. Right now. Friday's high don't look safe. And in order to buy from here, we need to respect a bullish fair value cap on the 15 M or something. Otherwise, just wait for the swing. And target session liquidity this week. H1. Yeah, nothing new here. I would target Friday's high to start the week off. I think we start off bullish. I don't think none of that news we had over the weekend is like, oh, we're gonna gap down for sure. So start off the week looking for buys. First stop, Friday high. Look to buy under session liquidity. And hold. We might have a good week. A good buy and hold week. Because of Google and Tesla on Wednesday. And no real major what would you call something that you have to look out for? No real major rug pull hazards. That actually could be the start of the rug pull. Like, yeah, everything's cool, and then you just get beat upside the head or something crazy. But all we can do is just adjust and keep going. That's that on that. Let me save this. Four. All right, y'all. Y'all have a good day. Peace.